Hey everybody, Christopher K. Smith. It's my FibLines quarterly update for January 31st, 2021. I do these updates once per quarter for my FibLines subscribers. It lasts about 10 minutes, and we're going to take a look at, give you a brief introduction to the FibLines indicator, take a look at the financial markets, current state of the markets through the lens of the indicator, do some symbol updates, give you my stock picks for 2022, and how I'm positioning new portfolio money. So first, what is FibLines? FibLines has to do with the Fibonacci sequence, which was originally observed to model the rate at which rabbits reproduce. So if you want some more background on Fibonacci and FibLines, you can go up to YouTube and search for Intro to FibLines, where I give you a background on it. But basically what it is graphically is you take a stock chart. Here's a DDOG, which is recently added to the Nasdaq 100. And you grab this little item down here, which is your Fibonacci retracements tool, which is a little percent sign. Basically, draw a line from the top and the bottom to what you think is a meaningful first initial move, kind of an initial important top and bottom. And I noticed some interesting things. First is that stocks, the prices tend to find support and resistance at multiples to this initial 100% move. And those lines are at 161%, 261%, and 423. And these are levels in the Fibonacci sequence where each level is the sum of the prior two. For example, the 261 is the sum of the 100 and 161. And this Fibonacci pattern is found all over nature and turns out all over the stock market. So basically the idea is prices don't move up in a straight line. The future sort of has these indentations based on multiples of this initial move. So what the FibLines indicator does for you is it draws these lines, it does the math for where the line should be, and it also has the initial levels sort of baked into it for certain symbols, for about 220 symbols actually, the Dow 30, Nasdaq 100, and some other select symbols. So once you add the FibLines indicator to the chart, what you'll notice is that we can now remove the manual drawing we did, is that the lines are drawn for you automatically, along with some smaller levels of lines. And you can see the larger pattern here. This is the 0% line, the 100, the 161, the 261, the 423, and there used to be I used to end the indicator at the 423 line, but as stocks just continued to move, I added the 686 and the 1108. So we can see in the case of Datadog, it's already reached the 423 lines. It's already had quite a move, and it's working its way through the 686 line with a target up here in the $270 level. So that's a couple things FibLines does for you. One, gives you future areas of support and resistance, and two, gives you a yardstick by which to examine the movements of prices. For example, once prices definitively breach this 423 line, their next move was up to the 686 line. So that's FibLines, and you can see the lines here, the 100, the 161, 261, 423, and then later I added the 685 and the 1108. So in terms of stock markets, another great year for the bulls, 25% for the S&P. In terms of my own accounts, I didn't do a lot of active trading, mostly just did portfolio allocations and whatnot, so had a pretty good year, up 10%, better than 10% in all my big accounts. I didn't do as well in my actively traded accounts, Thinkorswim or Tastyworks, but they're very small accounts. I really didn't do very much with them. My best one was my rollover IRA, which is up about almost 15%. So a great year for the bulls on top of a great decade, really, and it's been year after year of good performance now for many years in a row. In fact, the whole decade, the QQQs is up 638% since 2001, much less so for the other major indexes. So what does that mean in terms of fibs? Well, if we take a look at the Qs, we can see now that the Qs are right here at the 1108 line, and that's based on an initial 100% move that was made back in the financial crisis back in 2008. So we can see that, let me get rid of this volume subgraph here. Let me just pause this. Okay, I'm back. Yeah, so for the QQQs, we're up against the 1108 line here that was formed based on a 100% move set back in the financial crisis. So this is back here, I believe, in March of 09 was the 0 line. And right up here in, I believe it was the spring of 2011, was the 100% line. That would be a 100% move. So you can see now we've moved up 1,100% of that initial 100% move. So what that tells me is the Qs are kind of done here. They need to take a rest, have some of their indexes catch up. And the other two big ones, the SPY you can see is hasn't come nearly as far. We used the 100% move, also same 100% move as we did for the Qs back here in the 2008 financial crisis. But you see, we're only really up against the 686 line here. We have a long way to go up to the 1108, up at the 600 level. So the bottom line is the Qs have seen their day and need to take a rest, and the IWM, Russell 2000, and SPY need to catch up. Okay, so that's where we are with the markets. ADP, I have an interest in this company, not a direct position, but had an incredible run. Has beat all the indexes actually over since 2009, up by 730%. And it recently came up against the 1108 line here, so I recalculated it, and I took the old 161 line and made that the new 100 line. And that's kind of a technique you can do to expand these. And you can see this initial move here back in, I think it was like 2000. Well, anyway, in any case, we recalculated ADP, and we have a new upside target here of $347 based on the Fibonacci sequence. Great move out of ADP. Okay, inflation is a concern to all investors. Obviously, consumer prices up something like 6% on a one-year basis. Anecdotally, my homeowner's insurance went up 20% in 1 year, 20%. So obviously, replacement costs for houses are up, construction costs are up, lumber costs are up, housing, labor shortages are all over the place, and there's of course a huge housing shortage and rally in real estate. So how do we deal with all this? How do we deal with all the inflation? Well, basically, cash is losing to inflation, so deploy any free cash that you have beyond your emergency fund. I'm diversifying into crypto via Coinbase, on a very small scale, like $100 a week into Ethereum, just so that I have something going there. Obviously, invest in dividend-paying stocks. As this money rotates from one sector to another, it will always stay with dividend-paying stocks because they have that security. Okay, simple updates. We reworked Home Depot ADP. In terms of Nasdaq, there were new symbols added to the Nasdaq 100. Palo Alto Networks was added. Airbnb, Datadog. We already took a look at Fortinet, Lucid. Of all those, Fortinet has a very impressive looking chart. Long-standing company, been around like for almost 10 years now. Great looking chart. It's the 100, the 161, the 261. Recently broke out above the 423, came back and found some support there. Next stop is the 686 line over here at $423, and then above that we have $642 is the 1108 in Fortinet FTNT. Okay, my picks for 2022. First one is CVS Pharmacy. Now, I've been in CVS for a while. I've done pretty well with it. Stocks action's been doing pretty well lately. Recently broke $100 and coming up against an old high that it had. Let me just get to the weekly chart here. Coming up against the old high set back in 2015, I believe it was, at the $113 a share level. You can see that we have some resistance coming up right overhead on the FibLines, right about the 106 level. And it's interesting to note that that 106 was also resistance back, and this is the 686 line, I believe. So we have some resistance coming up right there at that point. But I do expect it to eventually get above the old high here at 113 and head higher from there. So the company's doing very well, very pandemic-friendly kind of company, and they're in the right place at the right time in terms of public health. Huge store footprint, excellent cash flows. I like CVS for 2022. CMG, Chipotle, restaurant stock, doing fairly well through the pandemic. Had a bit of a sell-off recently, coming down from an all-time high. Don't quite understand what that sell-off was about, but I'm sticking with it. I like CMG. Splunk, here's what FibLines can help you on the downside. So let's take a look at a chart of Splunk. We can see recently it's been making some lower lows. We bounced off here, or I should say we had resistance at this line right here at the 175 level. And we can see that our 0% line is down here at $30 a share. The 100 is at $65 a share. We're up here at 115. So we have quite a ways to go if Splunk is going to continue its way to the downside. So I like Splunk on the downside. And of course, Qualcomm, long-standing Nasdaq stock. I like that for 2022 as well. This one has been around a long time, had a huge peak, a huge run up to the moon back here in the early 2000s. So I like Qualcomm, very well-run company. Okay, and in terms of what I'm doing with new money, I had some money come in recently from a property sale, so I allocated to Thinkorswim. Domestic stocks, 15% SPY, 50% IWM, 50% Qs, brings us up to 45% there. 20% bonds, 50% into bond, BOND, total market, bond market ETF, Fallen Angels high yield, Treasury inflation protected securities, 5%. International stocks, 10% in the developed markets, 5% in the emerging markets. And then as an inflation hedge, 5% in real estate, IYR, and 5% in energy, XLE. So every one of these has a yield, and that's going to give me some yield support and some protection in the case of potentially rising interest rates. So that's it. That's my FibLines update. If you're interested in the FibLines indicator, you can get it here at the FibTools sell store, fibtools.sells.com. $99 for 1 year of for the indicator. 1 year of maintenance includes the mathematics and the levels baked in there for about 220 symbols. Your Dow 30, your Nasdaq 100, and a couple other, and a bunch of other markets, including your select sector spiders, some foreign currencies, and gold, bonds. It's all in there for $99 for the FibLines full indicators. That's it. Thanks for watching. Have a great 2022. Good trading, and have a great day.